Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 21st of July. All right, now looking at those US jobless claims numbers, I can't believe how sensitive the market is to these numbers, right? Now, there's a couple of things here. The Philly Fed business condition numbers were massively stronger, or much stronger than expected, right? And I think that combined with the jobless claims numbers gives us a little bit of a stronger dollar. And don't forget, the market's positioned short dollars, so a smaller outcome, you get a bit of a squeeze. But, you know, once again, if we look at the numbers that came out, I tell you what, it's a bit of a stretch. Okay, the actual number here, jobless claims 228. The consensus was for 242. Now, usually that would not even move the market, right? It's that close, right? It's no big deal. This is the big one for me. The business conditions much stronger than expected, and so that sort of, you know, gives the dollar a bit of footing. And the market was desperate to try and get this dollar moving to the top side. And that's what we saw on the sort of technical aspect. Okay, market very short dollars after the US CPI number, so a little bit of a squeeze there. And we are seeing a bit of a correction here in the US equity markets. And I'd keep a very close eye on the NASDAQ, right? Because the NASDAQ has been the driving force, right? All the push into the AI sort of zone has given the NASDAQ an unrealistic level. So if we get stronger numbers, you're going to see a squeeze to the downside in the equity markets. And if the NASDAQ in particular drops down through sort of 15,300, well, we might see a clean out of positions, long positions on the equities. All right. But, you know, we've had a pretty good week. And this is where these weeks can sort of creep up on you. And what I'm talking about is we've had a bunch of inflation numbers come out. And if you get a big variance where you see something topping out, like we have done with the UK inflation, you know, a number of months ago was up around 10%, comes out this week at 6.9%, and it's a flush out of long positions, right? So sterling is getting belted, and it's almost getting to the point where we may see a big correction if we see further UK weakness. And how does that play in for us? Well, I'll tell you what, we've got UK retail sales figures coming out today, and it couldn't come at a better time. Right. And the good thing is there's nothing else really coming out. We've got UK retail sales figures and then Canadian retail sales figures. We're not clouded by all the noise of US numbers. Right. So this is going to be a very good opportunity to see if the UK retail sales figures line up with the UK CPI like weaker and weaker. Well, I tell you what, the Bank of England has choked the UK economy and it's now sort of racing to the downside. So, the Canadian numbers, well, it's not so choked, but the focus has got to be on sterling, right? So when I come into today's trading opportunities, right, let me just change screens here. The key emphasis is the UK numbers, right? So if I just get that up, looking at UK retail sales, as I said, if this comes out weak, that's our best opportunity, right? It goes with the recent activity. Now, I've had to add in an extra little key here, a red number or red letters. That's at the crossroads where the trend is about to change, right? Breaking down through support levels. These are good technical trading opportunities. Sterling, okay, I know it's come a long way, but it can go a lot further. And retail sales will confirm the outlook for the UK economy if it does come in weak. So, and sterling Aussie is in a similar situation, whereas sterling Swiss, sterling yen, sterling CAD, they're already moving lower. So it is an easier trade to the downside on those numbers. You're probably trading the numbers though. You know, it's hard to find technical levels with some of these things. And on the, with that, Euro sterling, I know it's mid-range, but if we get weak UK retail sales figures, it will drift lower as well. It's a little bit against the trend, so don't sort of fall in love with Euro sterling. But those other instruments, I would expect some good trading opportunities around those if we do get low retail sales. High numbers, well, sterling Aussie really is sort of coming back to support, so I should ricochet higher. Sterling Kiwi, I think it would just go with sterling Aussie, but it is a bit more mid-range. Now, why wouldn't I pick sterling? Well, retail sales isn't as important as the inflation numbers, and sterling is already heading down. So we might get a slight correction, but I left it off because it's not as such a great trade as a weak number. Excuse me. So, and then Canadian retail sales figures. Okay, if we get a low Canadian like print on the retail sales, The dollar, okay, it's already squeezing a little bit to the top side. We've got a resistance trend line not far away. It's against the trend, but you know what? If oil also is falling, then you might see a nice little move to the top side on dollar CAD, a little squeeze, and sterling CAD there as well, right? Against the trend, sterling CAD is going down, but weaker numbers, we might see a move there. And higher Canadian retail sales figures, Euro CAD's already heading south, sterling CAD's already heading south, Kiwi CAD's heading south. Easier trades to get into those ones. And Aussie CAD's about to break down through a level. So there, to me, like once again, this is where the action is. Now, if I was, say, someone like yourself, when you're trying to work these things out, don't rush in and trade all these instruments. Okay, what you want to be doing is cherry picking the best one that you think is the best. And this is just my opinion. So, like for instance, the ones that go with the trend, okay, they're easy trading opportunities. Now, if you don't have trend lines, you may be looking for pending stop entry orders below the market, right? Bit more risk in that. Make sure you have your levels a decent way from the market and maybe smaller trade size, but you want to get into those trades. Same for low UK retail sales figures. Out of these two opportunities, the UK retail sales figures are much better because we've got that fresh, clear downward direction, right? So don't think the out of those two, the Canadian retail sales numbers are the best, because they are definitely not. All right, so that's where we are. And let me just run you through, just without sort of doing that. If I have a look at sterling, right? And let's have a look at the cross as well. Actually, sterling against the dollar, as I'm saying, like we've got a bit of a way here to go before we hit down through this level. Now, I've had a few traders ask me about technical analysis and, you know, does it work and all this sort of stuff. Now, if you might be wondering, why did sterling stop at 128.40? Well, I left this out on purpose because I just want to show you that, like, these trend lines are in play. Everyone can draw them, right? This is what the bankers do day in, day out. So you only need two trend lines to start drawing a trend line. Okay, here's your low from that level. Here's your next low. Lo and behold, oh my God, it's at 128.40. So these trend lines are in play. They are effective. So you can actually sort of draw them and prepare for the opportunity. So what I'm thinking is, now that it's sort of just poked through there, I would raise the level to that new sort of low. And if I get weak UK retail sales figures and it goes down here through this level, well, I'm expecting it to go down to this next line where it might sort of find a bit of traction depending on the level of variance. Okay, so that's where sterling is. Now on the sterling crosses, if you had a look at that list of instruments I picked, you'll be able to work out exactly what I was talking about. Now here's sterling Aussie, okay, coming up towards a breakdown level. Euro sterling, as I said, sort of mid-range, but if we get weaker numbers, okay, or strong numbers, it's a little bit of a chance for a move either side, to be honest, but it's mid-range. It's not like these other pairs like sterling yen, which is already broken down. Sterling CAD's got a very aggressive move going on to the downside. Sterling Kiwi, a little bit mid-range, but once again, it's sort of like Euro sterling, could pop a bit of a move either side, but and sterling Swiss to the downside, right? I know we've got a little bit of a correction here. That's actually a good thing because it is moving down, right? So just have a look at, across your instruments. Now, for a lot of traders who are just used to trading the majors, get into the crosses because this is where a lot of the action is. And something like sterling CAD, okay, if I get that up for you, actually come over here to the CAD crosses, because I was having a close look at this, and you can see here, right, if I was looking at sterling CAD on my previous chart, it was around this level here where it's breaking down. You want to see where that next major level is, and there's only one long-term level left, and it's 150 points to the downside, right? So either weak sterling numbers, right? And this is where you get the double whammy. We've got UK and Canadian retail sales figures. We get weak UK numbers. Right? I think this is the potential biggest mover of the day. Right? Weak UK numbers, this thing goes lower. On top of that, you get strong Canadian numbers. Well, we're going to get another push to the downside. And it could be easily at 168, the figure, by the end of Friday's trading. Right? So that's something that I'm looking at. I know, and I've got my hands full doing a bunch of things, but I'm just trying to put all this together for you so you can understand what's going on. Now, the Canadian crosses, as I said, some of these things, like Sterling CAD is a standout, obviously, with the numbers coming out and the way this instrument has moved. Euro CAD is moving to the downside, already breaking down, ready for another big push to the downside, as is Kiwi CAD. And here's Aussie CAD about to sort of break down through a support trend line. Dollar CAD, you've got this resistance trend line. So, you know what, weaker CAD numbers, we might see a little pop to the top side there to take advantage of a move, depending on what oil's doing as well, mind you. Okay, if oil's falling and we get weak CAD numbers, well, dollar CAD to the top side is a trading opportunity. And that's all you have to do is think about both sides of the equation, what's happening, where's the best trading opportunity. Now, as I was just sort of saying there with Sterling CAD, okay, you might get a situation where there's two different trades on. You might get, say, for instance, weak UK numbers and then weak Canadian numbers, and you're going to get a correction. So the first one is a good trade because it goes with the trend. It doesn't mean the second one isn't a trade, but don't forget, it's probably a short-term trade. It's just going to correct maybe the UK move. All right. And that's where you can sort of piece together trading opportunities. So instead of sitting in front of the screens, okay, all day wondering what's going on, right? Let me just come back to the main screen and sort of trying to piece together, okay, what's going on here? Is there a risk on profile? Is that going through to the currencies? Okay, you're trying to work that out. And you can see, okay, euro strong, et cetera, right? Instead of looking at this, focus on the numbers that are coming out, because they will give us, not just us, they'll give the core market clear trading opportunities as well. All right. And just to finish on, if you're looking for the expectations and the ranges for the UK retail sales figures, okay, expected month on month 0.2, year on year minus 1.5, with most importantly, the range. Keep an eye on the range there. Ex-fuel, well, they can come into play. They usually would line up, but just focus on that. And the Canadian retail sales figures, you've got 0.5 with the range, pretty decent range there, 0.2 to 1. All right. So anyway, that's I'm trying to do this as quick as I can. I know everyone's attention span's about a nanosecond. Check the opportunities out. Focus on the best ones. Most importantly, don't lose control of your capital management. Okay. That's absolutely imperative that you've got control of your risk. All you need to do is find opportunities and let the cash go into those opportunities, right? And that's pretty much it. All right. I was going to say something else, but I'll leave it till next time. All right, guys, have a good one. All the best. Cheerio.